Market's going to try to rally again this morning. This is what you need to know before the bell. So yesterday morning, we talked about how the markets were going to open up higher out of the gate, but we warned that the risk was that that early rally could fade and sell off into the market close. Exactly what happened. Markets closing right on that 50-day moving average. Well, this morning, markets are looking to try to open up once again. We'll see if they can maintain that. Now, look, we've got a whole bevy of earnings news that are coming in that are helping lift some stocks. NVIDIA reported earnings yesterday that beat expectations. That stock will be up about 8% this morning. This morning, a whole nother slew of headlines coming out in terms of earnings, from Domino's Pizza to Papa's, Dillard's, you name it. There's a lot of stocks reporting. That's going to help create some more volatility in the markets, unfortunately. But this is that critical support level we need to hold on to if this market's going to maintain this bullish trend. In fact, we are sitting right on that trend line right now from those October lows. So this confluence of support, the 50-day moving average, the 200-day, this rising trend line, all coincides right here where the markets are currently sitting. So this is a very critical point for markets to hold on to over the course of the next couple of weeks as we work through this sell signal. Again, upside is limited for the markets right now. As long as this sell signal stays in place, doesn't mean the market can't rally some, but the markets are likely going to kind of continue to consolidate within this kind of range that we have built between these previous tops and this rising trend line from the bottom. So there's this consolidation of price action at the moment that's likely going to continue to manifest itself while the sell signal stays in place. So again, a consolidation here, certainly a way to work off some of the overbought conditions of the markets, allow us a better entry opportunity to add some equity exposure in the next couple of weeks. But a break below this support level is going to suggest a retest of these October lows as well. So again, the risk is certainly there in the markets, with the Fed remaining very aggressive here, talking about higher interest rates. We have a meeting coming up in March where they will hike rates again, a surprise rate hike of 50 basis points. That would certainly take the wind out of the markets right now. Now, there's no indication of that. We've heard some rumblings from James Bullard and Loretta Meister that they would vote for a 50 basis point hike, but the Fed's going to be probably very cautious here about hiking too fast, too much, because again, when you take a look at the 475 basis points of rate hikes we already have in the system, those haven't even impacted the economy yet, and they're still hiking rates. So the risk to the markets here over the course of the next few months is the impact, that lag effect of these rate hikes beginning to impact economic growth. That's going to potentially slow economic growth down. That's going to impact earnings. And again, the markets are really running up here on expectations of a Fed pivot, more liquidity, and stronger economic growth. And that's not likely to be the case over the next at least couple of quarters. So again, be a little bit cautious here on your risk exposure for the moments until we kind of get through this consolidation period. Watch for the markets here to hold this support level. If they don't, we're going to need to get more conservative, at least in the near term. But use any rallies for right now, back up to about 40, 80, somewhere around that range, to reduce some exposure. If you've got overweight equity positions, good time to raise a little bit of cash until we get through this kind of trading process that we're in right now. So just a few things to think about as we get ready to go to today's trading day, getting ready to wrap up the week. I'm Lance Roberts, and that's what you need to know before the bell.